Accounting standard 40, investment property, correct? Now we are having one similar accounting standard, but the treatment is absolutely different. Which particular similar accounting standard is there in India?
IAS 13.
IAS 13. What is the name of that particular accounting standard? Investment accounting, correct? Now quickly tell me which particular kind of provision is covered in your IAS 13. Very simple kind of accounting standard. They have given that particular in a very much simplified manner.
Long-term investment, short-term investment.
First the basic things, not the permanent investing directly.
Long-term and short-term.
First, what is covered under investments? Under IAS 13 or present accounting standard 13, in that particular things, what is covered under investment? What is the meaning of investment?
Investment in any entity which are not our subsidiary or any associate
Or joint venture.
Related party.
Okay, that means investment in the shares, like that. Then investment in debentures, investment in bond, all that particular kind of thing. Mind well, this is not covered in IAS 40. If there is investment in shares, securities, all that kind of things, then that is not covered under Interstate Accounting Standard 40. It is outside the scope of Interstate Accounting Standard 40. Why? Because these particular things, investment in shares, securities, are called your financial instruments. As per your IAS 32 and 39, corresponding Indian accounting standards are 30 and 31. That's why they say that whenever IAS 30 and 31 will become mandatory, the treatment of investment in shares and security, whatever is given in IAS 13, that will be removed. This is what they said earlier when they issued this particular IAS 30 and 31. Now there is no scope of that particular kind of removal of the treatment because totally Indian accounting standards are converged into IFRS. What else was covered in IAS 13? Apart from investment in shares, securities, like these particular things. Let's say if I purchase one particular building for the purpose of doing business in that particular building. Let's say it's my factory building or corporate asset or like that. It is called my fixed asset. That particular kind of building will be called my fixed asset. But if I am having idle money with me and I am purchasing one particular building or land which is not going to be used for my business or for any administrative purposes, yes or no? Or it is not my inventory, it will be classified as what? It will be classified as my investment. That means if I am investing in any property, let's say land is there, building is there, with my idle resources which is not going to be used for my business, nor in providing services, nor for administrative purposes, or nor for the purpose of sale in the ordinary course of business, then that kind of property is called what? Investment property. Because whenever we verify IAS 13, normally what we are doing, we are only concentrating on long-term investment and short-term investment for shares, securities and all that kind of things. But one thing we miss is this kind of investment property, because investment property was only a small mention in IAS 13. They didn't prescribe any treatment for investment property. So they classify these particular things in the same manner whatever the classification was there for investment in shares and securities. So no, what other treatment was there in IAS 13? What is covered, that is okay. Investment in shares, securities and investment properties. What was the treatment? Long-term investments and short-term investment. All the investments are required to be classified under long-term and short-term. Correct? Long-term investment and current investment is what they say. Not the short-term investment, long-term and current investment. What is long-term investment?
Which will be held for more than 1 year.
Which is, the intention is to hold that particular things for more than 1 year. That is called long-term. What is short-term or current? Less than 1 year. Yes or no? This is not a long-term investment. This is what the definition is. Now what is the treatment for long-term?
Cost.
It should be shown at cost, at our purchase price, and if there is permanent diminution in the value of that particular investment, is required to be provided. Yes or no? For short-term, what is required to be done?
Cost or NRV.
Cost or NRV, whichever is less than that particular price, we are required to make the valuation on every balance sheet date. Yes or no? Now forget all this treatment of IAS 13. IAS 40 is a totally new version. First thing, it does not cover investments in shares and securities. That means whatever major portion of IAS 13 is there, that is not applicable. You so know why? Because shares and securities, whatever is there, that is called financial instrument as per the definition of International Accounts Standard 32 and 39. So International Accounts Standard 32, 39 and IFRS 7, that is regarding disclosure. 30, 31 and 32. And here the sequence is like this: International Accounts Standard 39, 32 and IFRS 7. Yes or no? Corresponding accounting standards. Now, so we understand that this particular kind of things are not covered in International Accounting Standard 40. What is covered is investment property. The definition of investment property is like that any asset we have purchased, which is not a financial instrument, first thing, which should not be what? Financial instrument, which is held, number one, not for the purpose of selling goods or producing goods, or for the purpose of providing services, nor for any administrative purposes. And number two, it is also not held for the purpose of sale in the ordinary course of business. That means first fixed asset is excluded, because what is the definition of fixed asset? It is held for the purpose of producing or selling goods or for administrative purposes. Yes or no? So fixed asset is excluded. Second is inventory. It is not going to be sold in the ordinary course of business. Why that particular thing has been held? It is held for the purpose of rental income or for capital appreciation, or both. Why we are holding that particular asset? For the purpose of receiving rentals from that particular property, or for the purpose of capital appreciation, the purpose of increasing that particular value, or what? Both. Yes or no? So if I am having idle resources and I am investing in that particular land or building, yes or no, then that particular thing will be what? My investment property. Why? Because I will receive what? Why I am investing in that particular property? To receive rent, or for the purpose of what? Capital appreciation, that after 5 years or 6 years I am going to sell that particular property and I will earn what? Profit. This is the intention. So these kind of things are covered under what? The definition of investment property. You write down everything, Sandeep. Write down everything. So these particular kind of things are covered under investment property. What they are saying is International Accounting Standard 17 we verified. What was International Accounting Standard 17? Lease. Lease, correct? In that there was finance lease and what? Operating lease. So here they are saying that for the point of view of leasing, if there is a finance lease, from the point of view of leasing, if there is a finance lease in investment property, then only for the purpose of measurement, International Accounting Standard 40 will be applicable. Please understand, from the point of view of leasing, that means I have taken one particular asset on finance lease, I am the lessee, and that is what investment property for me, because I have given on rental. Yes or no? Then International Accounting Standard 40 to the extent applicable will be applied here. For recognition criteria, IAS 17, International Accounting Standard 17 will be applicable, but as far as that particular thing is covered under investment property, what will be applicable? International Accounting Standard 40. From the point of view of lessor, if there is operating lease, from the point of view of lessor, if there is operating lease, then also International Accounting Standard 40 will be applicable. So why I am giving that particular things on operating lease? Only for the purpose of receiving rentals. Operating lease rentals is what? Nothing but my rentals income. Yes or no? So for that particular thing also, what will be applicable is International Accounting Standard 40. Yes or no? Now we are coming to recognition or measurement criteria. What is covered under IAS 40? We understand investment property. Now what recognition criteria they have given? They are saying that initially all that particular investment property should be recognized at cost. Initially it is required to be recognized at cost, and the same criteria whatever is given for International Accounting Standard 16, property, plant and equipment. The same thing will be applicable for the purpose of finding out cost of that particular investment property. That means purchase price plus non-refundable taxes plus cost incurred for the purpose of bringing that asset to their present condition and location. After initial recognition, you are required to decide whether you want to follow fair value model or what? Cost model. For the purpose of investment property, they are saying that cost model will be permissible only when finding out fair value is not practicable on continuous basis. That means on every balance sheet date to find out fair value is not possible. Only then you can follow what? Cost model. If you are following fair value model, then what you are required to do is on every balance sheet date, you are required to find out how much is the fair value of that particular investment property. And whatever gain or loss is there, that is required to be transferred to PN on all the balance sheet date. Yes or no? If there is a fair value model, you are not required to charge depreciation or any kind of amortization. If this is fair value model, then we are not required to charge what? Any kind of depreciation or amortization. But if it is not a fair value model, it is cost model. Let's say it is not practicable for me to find out on continuous basis the fair value on each balance sheet date. Then what I will do is I will follow my cost model. If I am following my cost model, then what will happen? I am required to charge depreciation on one reasonable basis. Reasonable basis means what? I will find out how much is the useful life and what is the pattern of economic resources consumption. On that particular basis, I will find out how much depreciation or amortization is required to be charged. Clear? On that particular basis, I will find out how much is the recognition amount. So on every balance sheet date, I will find out one particular amount of depreciation, and my investment property will be consumed in that particular proportion. Clear everyone? Sometimes what happens, they are saying that first initially I am saying that is not practicable for me for the purpose of finding out what fair value on each balance sheet date continuously. So I am following cost model. But after 2-3 years it becomes practicable for me to find out what fair value. And they are saying that that kind of investment property should be transferred from cost model to fair value model. In that particular situation, whatever will be the carrying cost, it will be compared with the new fair value. And whatever gain or loss is there, that is required to be booked in the year of transfer. Yes or no? And then after on each balance sheet date, we are required to find out what fair value. Clear everyone? Sometimes what happens is there is transfer. Transfer of investment property to what? Property, plant and equipment or inventory. That means earlier it was my investment property, but now I want to use it as fixed asset or property, plant and equipment, or I want to sell that particular things in ordinary course of business, so it will be my inventory. Or reverse case is also possible. Let's say earlier it is my property, plant and equipment, now it becomes my investment property. Or earlier it is my inventory, and now it becomes what? My investment properties. In that particular situation, what should be the criteria? Then please verify. First of all, we are verifying if it is investment property, it is required to be transferred to property, plant and equipment. If it is what? Investment property, it is required to be transferred to property, plant and equipment. Then they are saying that there are two possibilities. Either you are following what? Fair value, or you are following what? Cost model. If you are following that particular fair value model, then if you want to transfer that particular investment property to property, plant and equipment, then whatever is the fair value on the date of transfer, that particular transfer date's fair value will be taken as deemed cost.